Hello, I'm Marcus Brix with the CattleFax Closing Bell. Today's Closing Bell is brought to you by CattleFax, the deciding factor. For the week of October 5th, 2018, data from the U.S. Energy Information Agency shows U.S. crude oil production at 11.2 million barrels per day. This new record large weekly production is over 1.7 million barrels per day larger than the same week of 2017, but production has averaged around 11 million barrels per day since early summer. By coincidence, crude oil prices made a new 2018 annual high in the same week on October 3rd. Perceived supply shortages in the Middle East, with the U.S. placing sanctions on Iran in November, led to rampant speculation and a strong oil rally. WTI crude oil printed a high price of $76.90 per barrel, the most expensive domestic crude price since prices fell from a $100 barrel range in 2014. Today, just 2 weeks later, WTI prices are testing support at the 100-day moving average and are in the same range as at the start of September. Though oil production has been record large, usage has been outpacing supply for most of the year, and only in the past 4 weeks have storage numbers increased. 22 million barrels of crude have been added to stocks in the past 4 weeks, putting inventories above the 5-year average for the first time since March. The wave of speculative buying that drove the market into new highs was short-lived, as volatility and uncertainty are often negative factors to risky commodity investment. On the Tuesday before the market high, non-commercial traders, or the outside money influence, had invested 653,899 long contracts. 1 week later, their long positions had dropped by over 20,000, and instead the non-commercials were seen adding a small number of sell orders. Improving fundamentals and softer influence from the outside investors both contributed to the oil price pullback, but prices remain supported in the high 60s. Retail average gasoline prices were lower 2 cents this week at $2.96 per gallon, adjusting down for lower crude cost. Retail diesel, however, was another cent higher at $3.39 per gallon, tracking a record of setting new highs in each of the last 3 weeks. Diving into the motor fuels inventories shows the relationship more clearly. While gasoline exports have increased considerably this year, inventories have been mostly flat for months and are currently 15 million barrels above average. Diesel prices are more of a challenge because their inventory levels have improved seasonally but are still below average and below a year ago. Thanks for watching. Remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the volatility is extreme, the risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team, with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.